how much the hell that costs to do all that, to move those trees. Alright, I'm back. I keep getting interrupted every time I start to make my video. Okay, y'all, I'm back. I'll wait for a couple more minutes, and then I will resume my discussion again. Hey, David. Hey, y'all, I'm back. Okay, I want to discuss the common tax errors that ride sharing independent contractors make, whether you do it full time or part time. Now, in my previous live stream, I had discussed some of the things that people make, common mistakes. And the very first common mistake people make is not making the estimated quarterly taxes that's due every quarter. April, September, December, January, following year. And one of the things I keep hearing on these videos that I hear people make is, oh, my tax person told me to set some money aside at the end of the month to pay the taxes next year when you file your return. That is not quite true. The tax system is a pay-as-you-go system. That means that you pay taxes as you earn the income throughout the year. Now, let me give you an example. You work, you get a W-2, and you get your paycheck every 2 weeks, weekly, or however often you get paid. And the taxes are taken out once your paycheck is distributed to you. You see federal taxes, state taxes, FICA, Medicare, local taxes, all that's taken out as you earn your income through your paycheck, which is withholdings. Now, as an independent contractor like myself, and I'm guilty for not doing it where I don't pay quarterly estimated taxes. Well, at least not yet, put it that way. So if you're a person who works Grubhub, Uber Eats, DoorDash, Instacart, whomever, and you get a 1099, my thing is this. The first thing you want to do is go to EFTPS.gov. That stands for the Electronic Federal Tax Payment System, EFTPS.gov. You request a PIN code, and when you get your PIN code, you set up that account online. Now, you could have payments coming out of your debit card or your checking account, and you could pay those payments. Now, you don't have to pay you don't have to wait until each quarter comes by to make a payment. You could actually you could actually pay directly from the EFTPS account by setting it up, having it taken out, and even if it's like this payment is going to come out weekly or however you wish to do it, $25 a week, $100 a week, pay it towards your account. And at the quarter, all the payments are showing as payment. That's one thing you want to do first. Now, do not wait until April 17th, because April 17th, all taxes are due. Do not wait until April 17th to pay any taxes that you owe. So if you do your taxes right now and it shows you owe a balance $500, and you say, well, I don't have the money, so I'm not going to file my tax return. No, that's the worst thing you could do. Failure to file, failure to pay. If you owe the IRS, file your tax return anyway, even if it has a balance, send it in. And try to make payments before the 17th of April. So the quicker you could file, and let me tell you the reason why you need to file sooner than later. File your return sooner because if you are a full-time 1099 independent contractor and you have not been making those estimated tax payments from last year, those quarterly estimated taxes, those taxes should have been paid in those 4 quarters. And if you didn't make not one penny, and you know you drive Uber full time, Lyft full time, and whatever, and you didn't make any money, you're going to owe a big tax bill. Taxes is not paid based on the income. Hey, taxes is not paid from when you file the return minus your Schedule C losses and your deductions. You don't pay the taxes after you take the deductions. You're supposed to already pay taxes on the anticipated income that you already made. So for all those people who show their screen, their phone, showing all their business, counting tips on the app on Tip Tuesday, sit up there making this stupid. I got paid $555, and you cashing it out every single week on your Uber card or whatever, and you just taking the money out. You're supposed to pay taxes on that. You make $500 a week, you need to set aside at least $150, and I'm only estimating that. I'm only estimating it. Now, don't just put money in your bank account and say, well, just put this aside and pay it next year. No. Don't. That's incorrect. Set up an EFTPS account. Get your PIN code. You'll get a PIN code in a couple of weeks or a couple of months, depending on how slow the IRS is. And once you get that PIN code, establish your EFTPS account and go online to the irs.gov withholdings calculator to determine how much you're supposed to pay in withholdings. Now, another way that you can determine how much you're supposed to pay in estimated taxes is look at your last year's tax return. If you paid $5,000 worth of taxes last year, then you divide that by 4. So $5,000 divided by 4 equals what? 1,000. 1,050. Whatever it is. Let's make it an even number. Let's make it an easy number. Say you have $8,000 of taxes on your tax return last year. You divide that by 4. That means you're supposed to pay $2,000 quarterly taxes every quarter, which basically equates to $500 a month that you set aside if your taxes was $8,000 that you paid last year. Now, $8,000 of taxes that one paid last year means that you made approximately between $55,000 to about $58,000-$60,000 a year, and that is before any type of deductions. That's before any type of standard deductions, Schedule A, Schedule C loss, period. So don't be one of these people who listens to other YouTubers who don't even do their taxes themselves and talk about, oh, I submitted my return and gave it to my tax man. And they told me, to put the money aside into a bank account. Don't listen to people who say stuff like that either. Put money aside, put it in your account. You know darn well, and most people know it, that put the money in your bank account and put it aside and open up a separate account and put the money in another account and pay at the end of and pay when April comes along. Nope. You pay quarterly. And like I said, when you pay it quarterly, look at what you made last year. And whatever you made last year, you could pretty much say, well, how much did I make? It is before you take out the standard deductions. Whatever your tax is, that's what your estimated tax payments should be. You estimate it according to what you did last year, and you go from there. Because whatever you pay in estimated taxes, including any type of job that you pay in withholdings, is going to determine whether or not you're going to either break even or you overpaid. If you pay too much, that's all a refund is. You paid too much in taxes, and you're getting back the money that you already pay into it. Now, for those full-time drivers, you haven't been paying any type of taxes, and you say, okay, I will pay at the end of the year. Number 2 blunder or common mistakes that people make is the state income tax. We talk so much about the federal IRS. If you don't live in Nevada, Florida, is people deals those other 46 states, you're not paying taxes set aside. And if you're not making quarterly estimated taxes to your state, payments to that you live in, that's most people's problems. They end up owing this, not only just the IRS, you end up owing the state agency. And oftentimes, as independent contractors, 1099, we talk so much about you end up getting in trouble because most people don't even have the $5,000. Oops. No, I'm in this damn area. I'm not getting a good connection. Hopefully I'll be able to, but I hope I'm, let me try to drive my way out of a bad area. Because I know I'm saying some good stuff. So the other thing is not paying anything towards the state. And Each state is different, so I can't really talk about how much should you pay to the state that you reside in, but I'll give you a good estimate. I'll give you a good figure to go by. You should set aside for the state about 15, if not to be on the safe side, shoot, you might as well set aside 20% for the state. But the state also requires estimated taxes too. Tell me if it still got a bad connection. Oh, I hate this damn connection. Hopefully, I'll be able to get out of this bad connection area. I hate Atlanta at times. They got so much going on. It's like they almost try not to have access to using the Wi-Fi. Uh, okay, thanks. Good. Hey, Lexi. So that's the other common mistake. It's not paying estimated taxes to your state agency. Now, you could go to the state website. Um, I know California is the Franchise Tax Board. Um, Georgia is the Georgia Department of Revenue. Um, New York State is New York State Tax and Tax and Federation. I can't remember what the state of New York is again. But anyway, up in Albany, New York, put it that way. So not paying state taxes is what's going to get a lot of people in trouble. Another thing that people do is, oh, I owe, so I'm not going to file my return, and because I ain't got the money, I'm not going to file my tax return. Another dumb mistake to make. Because if you failure to pay and failure to file are two separate things. If you don't file your return and you owe and you don't file on time, even though you owe taxes, you will get a delinquent tax penalty, which is 100% of the unpaid tax, up to 25%, compounded daily. That's a heavy, 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 heavy fine. That's the worst thing you could do. You could ask for an extension to file your tax return if you know that I'm not going to file by April 17th. April 17th, taxes are due this year. If you cannot file your tax return by April 17th, you could ask for an extension to file. That doesn't give an extension to pay. So let me repeat that again. If you do not have the money to pay your taxes when taxes are due, send a return anyway. Okay, why you walk across the street and then I got the right of way? Bitch, you better hurry up. Dang. You know, people, that's jaywalking. So, even if you owe, and that goes to the state too. Everything that applies to the federal pretty much applies to the state as well. So, I said, dang, I owe taxes. I can't pay, and I'm not going to file my return. File the return anyway. Mail it in. E-file it, mail it, or whatever, and then pay what you can. Even if it's just $20, pay something up before the deadline of April 17th. Because after April 17th, any unpaid taxes is going to be charged interest and penalties compounded daily. So file your return in enough time to see where you stand. If you owe, file it, mail it, send in your payment, make a payment. Don't get yourself caught up in, well, I ain't got no money and I'm just going to not send it in. Mm-mm. If you need an extension to file, you can get an extension to file, and the extension to file, they'll give you until October 17th. That doesn't mean you get an extension to pay. If you still owe, you're still going to get charged interest and penalties. Now, for those who live in these areas that's a disaster area, you can go to iris.gov and if you live in the disaster area zones that you were affected, you automatically get an extension of 6 months declared as long as it's a federal disaster area. If you're in a federal disaster area declared a disaster, and I'm quite sure if you live up in the Northeast and you've been affected by that bad storm weather, natural disasters, you already have an extension to file your return of 6 months. And that also applies to business returns. So you could look it up if you're in the disaster zone area, and I'll probably do a live stream video on my laptop and pull up the areas that's considered a disaster zone, because it's all based on your home address and your zip code. So as long as you're in that area and you are in that disaster area, the IRS system already going to detect that you are in a disaster zone area and you qualify for an extension. And that also goes for previous years. So, but like I said, you owe money, you're not going to get an extension to pay, but you could get extension to file a return. The third thing that people make errors or mistakes on is using other people's children and claiming them as their dependent. Not only will you get audited, but you will get your return flags easily for asking proof that you could claim those dependents. There is no such thing as I didn't giving somebody permission to use it to dependents, or finding out, don't let your ratchet relatives, and I say that in a kind way because I find that a lot of people do that, is that they don't work, or they sit at home, they get food stamps, they get public assistance, they get everything under the world, under the sun, and they work just a little bit of hours at the nearest McDonald's, fast food establishments, work there for about 2-3 months, cut up an act of food, get that little amount of money, just enough to get earned income tax credit and child tax credit and all these other credits, and they work just enough to keep their government assistance programs running, and turn around and file returns to get this free money, this tax money. Oh wait, I can get my tax money, and and that's what makes me sick. That's what makes me sick, because I'm sitting here running these streets, hustling, and they barely act like they want to give me any SNAP or food stamps, because you know how I felt about going to that damn DeKalb County office dealing with those dumbass niggas, and I hate to say it, dealing with all that bull crap, and I pay taxes for the last, 30 something years maybe, and dealing with some bull crap. But one of the things that people make is um, filing other people's dependents, and people tell them, "Ooh, exactly." That's why I don't care. I may not care for Trump too much, but I can tell you that's the next thing that's going to be done with. They're going to overhaul that welfare system, and people and black folks and all these liberal talk shows going to be marching up and down talking about, oh, they got against things against people of color. Oh, they got things against black folks. Yin, 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 blah, blah, blah. And all that's doing, people need a handout, and they're going to quick to say something. Bump that. I don't give a damn. Now that's one thing that if the Republicans was to come up and change and cut, that's one thing they need to cut. Cut that. This ain't nothing about against the poor, because sometimes these programs enable people and it allows them just enough to get a check, and you getting $4, $5, $6,000 worth of refunds. So about my refund check, and then being ratchet and flossing all over your little raggedy ass neighborhoods, and then people find out, well, Shakisha got $5,000, and you're getting yourself killed. You heard about that story about some young mother got killed over her tax refund check. Don't be flossing around that money. You get a little $6,000, and people want to floss and go all over the place, and then somebody else. I don't want nobody to get killed over no money, but that little bit of money, you getting $4, $5, $6,000 plus refundable refunds, and spending it on weave and some ratchet, ugly looking nails and fake ass eyelashes and Jordans and rims on your car. Them nigga shit. That's what it is. I'm sorry if anybody feel offended for me saying it, but you know what? That's exactly what it is. Ratchet. That applies to black folks and some of these white trash. So I ain't gonna just say those all black folks. There's some ratchet white folks too. White people call it white trash. That's what it is. Walking around getting all that money, and then you turn around, they want to complain about grow up, work, do whatever you need to do. Stop milking the government. That's one thing that really pisses me off, because when I was in graduate school with my MBA, I wrote a case study about the earned income tax credit and the history of it, the implications, and trust me, it ain't doing no good for nobody. You say, well, it's supposed to help the poor. It's supposed to help the poor. Now, I'm not saying I'm against poor people, because technically I'm poor. But don't be milking the government, So that crap gonna end real soon. What you think they're doing with this revamp of the tax code? Doubling up the standard deductions and eliminating this and eliminating that and all that kind of stuff. They doing that. They doing all those changes because they claim they're making the tax code simpler. Trust and believe. There's more to it than you think. Now, enough of that political rant. But the next point is, don't let anybody tell you, well, let me go ahead and let me let you use and claim so-and-so, my child, da-da-da, and you just give me $1,000 or don't do that. Don't negotiate on stupid stuff like that. Please don't do it. And I know people do that. They do it. They know they're getting $6,000. they let you use their kids in returns, and then they give you $500 or $1,000 food stamps. Oh, let me go ahead and buy some of the SNAP cards, and you give me $100, and I'll give you $200 on this card. Stupid. It's dumb. It's dumb. That's why they cutting the food stamp program. And when people bring it up in these talk show radios, conservative radio stations, and they talk about the abuse, people want to cry, "You're being racist. You're being racist. It ain't against black people." But you do it. So let's get real. Why when white people talk about that is done, we want to cry and scream, "They're racist," and they got what's doing it. Don't get mad when somebody else brings up a point that's something that's obvious, and then you get mad when someone is speaking the truth just because another race say it or another group of people say it. Black people, we want to black folks as a whole want to get all mad because someone bring it up or talked about it on a conservative radio station. And don't tell me white people do it too. White people do it too. I ain't worrying. Everybody does it. Yeah, that's true. Everyone does it. But to me, I can only speak from experience of what I see and what I know, and in my 10 years and really long in my 20-something years of doing in the tax industry system, that I see how it's done. So stop it. What's the other mistakes, common things people do? Filing with the last pay stub. You do not file your tax return using the last pay stub. Number one. Number two, filing your last tax return with a pay stub does not give you all the codes that's needed in regards to the calculations of your taxes. When you look on your W-2, there are certain codes that tells you what they're able to give you credit for. So if you use your last W-2, it's going to be rejected 99% of the time. And if it goes through, it always results in a CP 2000 notice. Now, CP 2000 notice means that the IRS received information about your income and it doesn't match your return. And when it doesn't match your return, the IRS will basically correct it and you're understating or underreporting your income. So when you underreport your income, say for instance, you said you made $20,000, but the IRS gets something later after the tax season's over, and they then turn around and say, did this person report all the income on the return? And if they say nope, they said nope, you didn't. Here's the correct return. This is what you actually supposed to report, and this is what you're going to end up owing, because you underreport your income. It means you understate your taxes. When you understate your tax return, underreport your income, then you get a penalty for underreporting your income. That is another thing that people get. It's not just a penalty and interest charge for not filing the return, but it's underreporting your income too that gets people in trouble. So when you do all those things, it'll get you in trouble. Matter of fact, one of the things that people do is filing a return that's late. If you owe, file the return, but if you file that return late, you get a delinquent penalty, failure to pay, failure to file, and you end up making your situation worse. Now, let me see, what's the other common mistakes that people make? Another thing that common mistakes people make is not checking your return once you get it back from the tax preparer. If you have a tax preparer, make sure that they signed that return under the return that says preparer, PIN number, PTIN number. The PTIN number is a registered PIN code that a tax preparer must have on file with the IRS. Come on now, hurry up, walk across the street. You must have a PTIN number. Here it is. I'm going to Jackson Hewitt, y'all. And if I didn't tell, I didn't say it. I applied on Indeed, submitted my resume to Jackson Hewitt, and immediately I got called back to help them out to work with Jackson Hewitt. So I'm at this Wesley Chapel location in the hood, and I spoke with the guy yesterday, and pretty much he said, we need your help, we need your expertise, and I'm about to speak to him because I will be working with Jackson Hewitt probably to the end of the tax season. But he did mention other opportunities in management, not necessarily working for these small franchises, because this someone who owns this franchise owns about he mentioned about 7 or 8 locations, and then he owns about 2-3 locations in South Carolina. Yeah. And so I'm gonna talk to y'all for a few more minutes, then I'm gonna have to go inside. Make sure. I hope he's there. I ain't come all the way out here for no reason. But yeah, so I'll be working and helping them out. You know, of course I'm gonna get paid. I'm not doing this for free. And when I tried to launch my own tax business from home, that software, or to have the enterprise software, that thing costs a few $1,000s, about $2,000. So I guess this year I'm going to try to come up with the money so I could actually have the software so I could prepare people's tax returns, because right now I try to use some free software. You know, I'm doing it unofficially as my own tax business, but I'm looking into either buying a franchise of either a Jackson Hewitt franchise or H&R Block franchise. It might be cheaper for me to buy a franchise, so I'm looking into buying a franchise for next year. So my goal of all this hustle that I've been doing is to buy a franchise for Jackson Hewitt office. But I'm going to see how much it costs. So hopefully that could be, I could try to come up with the money to open up an office and open up my own franchise office. And there's some other things I want to do. Now, let me see. What's the, another common mistake people make is not following instructions when they get a letter from the IRS. If you get a letter from the IRS, please read it in its entirety. Read everything. If you don't understand the letter that you received and you went to a tax preparer, don't just give them the letter. Here you go. I got this letter from IRS, and because you went to a tax preparer to do the letter, don't just give it to them, because the tax preparer is not responsible for what the IRS is asking you to do. And don't rely on the tax preparer to respond to the letter and thinking they're going to follow through and give the information to the IRS. No. First of all, if they don't have a power of attorney and they don't have authorization to discuss the notices with the IRS, just because they did a return for you don't mean that they could call the IRS on the telephone and say, this person told me I could call on the IRS on their behalf and discuss this letter. If they don't have the proper authorization to discuss notices and letters, then they're not going to help you with the letter. You're responsible to respond to the IRS when you get a letter and a notice. So don't follow that. Don't think that, well, my accountant said, because if they don't have that on file, just because they did your return don't mean that they call the IRS to handle your matters. If you did not do Form 2848, which basically is a form to allow them to discuss your return and to authorize to answer to the notice, they didn't do anything. So that's another thing. Then the other point I want to make is these fraudulent phone calls. If you get a call from the IRS saying you owe money, please leave it immediately, and I keep getting these damn messages on my voicemail, and they got the nerve to leave a voicemail, that's not the IRS. That's a scam. That's a scam. Now, sometimes people think, well, that's obvious. I know that. But that's not true, because people still fall for the trick. So I have to make that disclaimer, because you can't always assume everyone knows that. Now, the other thing that I want to make is keeping your information secure. Do not give your paperwork to people and know that they are a tax preparer or my accountant, that your information is secure. Because identity theft is rampant. Let me tell you how most identity theft happens to people. It's the simplest thing. There's people who do is they take pictures of people's personal information, name, social security number, address, and people who dump looking for personal information, go into people's mailbox when you're not home, and people steal stuff in the mail. You know they sell that information, and they have people who fraudulently file tax returns just to get money. So when you go to someone to do your return, don't give them your original information. Don't give them your original documents. You know? Exactly. People get their office burglarized right around this tax year season just to get information. Just to get information. Just to get the simplest, all you need to get from somebody information is someone's name, social security number, filing tax returns, working under somebody else's name and social security number. And that's another thing you want to do, and I'm going to end the video because I'm going to see if this person's in the office. Another thing that one needs to do is always contact the Social Security Administration. You go to SSI.gov, SocialSecurityAdministration.gov, and request your wage statement, meaning all the income you've ever made in life. You want to see what was reported to the Social Security Administration. And what you want to do is see that all income ever in your lifetime has been reported. If you know you didn't work 1 year, and say you was working the ride sharing gig jobs, as a 1099, you pay to your self-employment tax is to go towards that pays part of your Medicare into your Social Security. That's how you paying. So if you're an independent contractor and you've been doing it for 4 or 5 years, and you look back, make sure that information is reporting income from that. Hey, you got free McDonald's? All right. You know, I fell in that trap. Got free McDonald's the other night. That smoothies. That thing tasted nasty. I threw that in the garbage. I end up eating like the chicken nuggets, the fries. Man, my stomach hurt. I can't eat McDonald's. I mean, I know I keep saying I ain't gonna eat McDonald's. I'm not gonna do it, but I love me some Chick-fil-A. That's where I end up going. After all that, I end up using my free. I got me a free chicken sandwich from Chick-fil-A. Oh, I can't go with no McDonald's no more. I said I mean it this time. Made my damn stomach hurt. Shoot. But what I was saying, because I got to go in there and speak to this guy, see if he's in here. I'll probably work with them, but they're going to have to tell me something good. I'll probably work with them when they need the help, but I'm going to have to tell him he's going to have to pay me $12, $14 an hour, but he talked about $10.50 in the first 10 returns, and then we'll give you an increase. You're going to have to give me you're going to have to give me way more than that. But we'll see how that goes. So get your statements from the Social Security Administration. So when you get the Social Security Administration, look at your income throughout the year. If you see that, wait a minute, I didn't work this year. How come they told me I got this income and I didn't work? That means somebody's working under your Social Security number, and they getting paid wages using your number. So you want to make sure that you safeguard your tax records. Don't just give it to anybody. Even if I said I'm doing your return yourself, and I'm doing your return, trust me, your stuff is not laying all over the world, and it ain't in the car, and it's not going to be anywhere. You know? So be careful about who you go to, you know, because let me tell you, the IRS has a list of tax preparers that's under investigation. If you go to someone and you go to an area and you say, oh, I'm going to go to this tax preparer, and they tend to be in a very low income area where you know for a fact that a lot of people probably get earned income credit. Because if a tax preparer has a high percentage of clients who get that earned income tax credit, everybody return who do they go to gets reported. And sometimes your delay has nothing to do with you. It has to have to do with the person you went to. So your return does not have to be reviewed because of what you've done. Your return could also be affected by who you went to. And let me tell you, I'm not going to say experience because I worked there. That's what happens. That is a very common thing that tends to happen a lot. And let me tell you who it tends to affect. If you live in Florida, I hate to tell y'all, if you live in Florida, Georgia, particularly Florida, I hate to say it, Florida has so much fraud when it comes to the IRS that anybody who lives in Florida, they basically putting a crackdown on residents of Florida when it comes to taxes. You live in Florida? I'm sorry to say, I hate to tell y'all, there's so much fraud going on in Florida when it comes to that taxes. It's ridiculous. It's so stupid and ridiculous. Is majority of fraudulent cases comes from people who live in Florida. You live in Georgia, you got something going on. What the hell? I'm telling you, I don't know what it is with this identity theft. But a lot of people live in New York, New Jersey, California. They got so many people in Florida that got people's names and social security numbers based out of Florida that it kind of prevented a lot of people's returns from being reviewed. So you have an issue, well, say, well, dang, I filed my return with the IRS, and why is it taking so long? It's because you're a victim of identity theft, and somebody in Florida got your information. Now it's been improved. It got improved. It was improved a little bit now. A lot of people have been getting caught. A lot of tax return has been stopped. But shoot, but Florida is a identity theft paradise. So, all right, y'all. Let me go in here. Let me see if this person is here and talk to him. And I'll be back with y'all later on. All right. Talk to you later.